I'm going to kick it off with something brand new and very exciting. It's called the pass-through entity tax. We call it PTE. And so if you've been coming in for your tax planning appointments and opened up our emails, you would have saw an email from us talking about this pass-through entity tax. So back in 2000, before 2018, you were able to write off your state income tax that you paid. So for example, if you owed California $12,000 and you had $4,000 of property taxes, you were able to write off the $12,000 plus the $4,000 for a total of $16,000 off your federal tax return. Well, in 2018, the Tax Act came out and it no longer allowed, it capped it at $10,000. That's what you heard a lot around the news about the SALT cap, that you can only write off $10,000. Well, for a lot of people, your property taxes and what you pay DMV fees is close to $10,000. Now you don't get to write off your state income taxes anymore on your federal return. Well, California came out with something, and the federal government is allowing it to write off what you owe the state of California through your corporate tax return. So it gets kind of tricky with the timing and everything like that. If you met with us already, you already heard about this and you already took the steps that you needed to write it off for 2022. But this is something we can still write off for 2023, and as long as they're going to allow us to do it. So if you haven't heard about the pass-through entity tax, it's a way for you to write off California state income taxes that you have to pay and get a deduction. So as Kelly said, if you owed California $10,000, our average client is in the 32% tax bracket, you would save $3,200 on your tax return by doing this.